and welcome to this Power 50 webinar. My name is Polly Jean Harrison. I'm the features editor over at the Fintech Times, and I'm thrilled to be here presenting this webinar on behalf of the Power 50. So today we're going to be talking all about wealth tech. So wealth tech is often considered as one of the more popular verticals within the fintech space, with personal wealth management constantly on the rise. Wealth tech companies have really started to carve themselves an ideal niche in which to work, offering innovative solutions to transform the investment and asset management world. So today we're going to be taking a deep dive into the whole world of wealth tech, learning what's on the horizon for the industry and how it's thriving. And I'm joined today by a fantastic guest, Alex. Alex, thank you so much for joining me today.
Hi, Polly. Good to see you.
Good to see you as well. Why don't you give us a little bit of introduction to who you are and your role within Delio?
Sure, yeah. So I'm Alex Sigin. I am our Global Head of Client Solutions at Delio. I joined the firm sort of 8 months ago after 16 years or so in big bank wealth management. So worked across Coutts, Barclays Wealth, UBS and Royal Bank of Canada. Delio is a private markets platform. We're a SaaS business, but we're a white labeled sort of infrastructure as a service business. So we build the technology that various firms use to match their clients with private market opportunities.
Fantastic. And so you'll be very familiar with the wealth tech space then.
Pretty.
Yeah.
Yeah.
It'd be great. Obviously, this is a super high level question, but it'd be great to just get a very, very basic understanding of what is wealth tech and what are some of the use cases within the industry at the moment.
Sure. Yeah. Well, I don't think there's a specific definition of wealth tech, but for me, I think it's anything that connects, the way wealth management sort of firms in that ecosystem do business via technology. So historically, it used to be very much a business, people to people type business. And as time has evolved and technology has evolved, ever more so technologies plugging the gaps and automating processes that people used to fill. So I think, for me, it classes from anything from, the robo advisors giving some form of asset allocation advice in personal wealth management through to, what we do, complex sort of private market workflows for, whether it's big banks or private equity firms trying to link their clients with deal opportunities.
Yeah, fantastic. And so who is using wealth tech? You gave a couple of examples there, but are we talking about our consumers here, or is it sort of direct to, big banks and sort of asset managers and things like that?
Yeah, I think it's more and more people are using wealth tech. So on the direct to consumer side, firms are trying to get their client base to engage with that technology. So I guess Nutmeg or some of the robo advisors of the past are sort of examples of more well-known sort of platforms that do that. And then on the institutional side, I think one of the strategies for all institutions is trying to manage their cost base by implementing technology that can make things more efficient, reduce costs. The compliance angle, it's ever more important, and the more technology you can use to clear audit logs or comply with the various regulatory regimes, the better. So I think everybody's using it more and more, and I think certainly over the last 5 years, as all of technology improves, let's say, and more tools are available, I think it's becoming more deeply entrenched in various firms.
So it feels like quite an exciting time really in sort of the wealth tech space. Like you say, it's all developed quite significantly over the last few years. Are there any particular sort of advancements or innovations that are exciting you right now?
I think there are, similar to the pace of change in technology in general, that there are tons of advancements all the time. I think mainstream media is seeing Chat GPT all over everything at the moment. There are other AI tools out there, Google developing their own sort of AI technology, and the ways these will be embedded with, in various parts of the chain or the ecosystem will be more and more rapid, I think, as time goes by. I think it's also linked to, the external environment where it's easier than ever to set up whether it's a software as a service platform or any form of technology business, easier to do it than any time in history, because you've got more freely available capital, but you've also got those no-code tools or various technological innovations that make it easier for a small group of people to do what a large group of people used to have to do. So I think it's all quite exciting because those two dynamics mean that there's more and more innovation going on in the space. And obviously what we do is, we try, given we've been doing private markets technology for 8 years or so now, we try and integrate as much of that innovation as possible into the firm, whether it's, leveraging our software development team with AI tools, or whether it's, looking for, new angles for old use cases to just improve our offering over time. And I think everybody's doing that to an extent. So,
yeah, and I was going to ask sort of what the Delio stance on all of this is, and how much you are sort of dipping into that and bringing the technology into your own offerings.
Yeah, so the structure of our firm is, I think we're still 60% or so on the software engineering development side. So the way the firm's built is that we are all the technology is in-house, so we don't sort of outsource much of what we do. And the reason for that is to just maintain that adaptable and flexible approach. So the end client, whoever they may be, with building the configurable workflows and infrastructure for them to serve their clients, we do that in an in-house way. And so clearly, the more technology we can implement to help us, the better. And if it's making one individual coder 10x more productive, then that's what we'll seek to do. Or same goes across the rest of the firm.
Yeah, absolutely. But I guess, what are the challenges then involved with this sort of technology and sort of wealth tech in general? Is there anything in particular that stands out as something to overcome?
I think there's huge challenges from, well, if we take wealth management broadly as an example, historically it's a very much people-to-people business. So if you're a high net worth, ultra high net worth client, or even a family office, you're used to dealing with an individual, in an office face to face. That's probably shifted a bit more to virtual over time. But then to think the transition would go from face to face to virtual to then, say, a robo platform or more automated, that's quite a big step. And I think over time, because the client base demographics have shifted, so you're getting more and more younger people with wealth or with interested in engaging with wealth management platforms, I think it's naturally shifting more that way. But the challenge there is always, how do you shift people's views on the value in not having a human in front of them, but having a platform or more technology in front of them. So I think that's a big one in the wealth management space. And then I think in terms of large institutions adopting technology to solve ways they have done things historically, it's that internal bureaucracy to an extent, or the usual, well, we've done it this way, so why would we look at a platform to solve for it? So a lot of the challenges we come across are internal tech teams thinking they can build platforms quickly because it seems reasonably easy, but obviously having iterated over 7-8 years of lots and lots of pain to get to the conclusions we've reached, it's not as easy as it seems on the face of it. So I think there's always the friction between that wider external market with service providers selling to banks or other institutions, and then their internal teams wanting to solve the problem from ground up or scratch.
Yeah, absolutely. I think what you said about sort of the younger generation was quite interesting, because I know like personal investing apps and all these sort of things are really popular at the moment. How does that affect the industry as a whole? Obviously, I know that's sort of thinking with a more consumer lens there, but does that sort of the younger people coming into it make changes sort of down the line as well?
Yeah, I think so. So I mean, even just going back 10 years ago, 10 years or so ago, when I was working up in Manchester, like there were very few apps to do anything to do with finance, other than like a banking app or that sort of thing. And then we've seen all sorts of apps spring up, but just because the consumer base out there is used to using that medium, and like social investing apps like Ticker and things like that, which was set up from an ex-colleague up in Manchester. Those things have gained great traction over a relatively short period of time, because there's loads of people out there that want to engage through that form, rather than the previous form of paper, that sort of stuff.
Yeah, I feel like I see it a lot on social media, almost kind of like not get rich quick schemes, but on like TikTok and stuff, you'll have people saying, "Oh, invest this and this, and then in 10 years' time, you could have $1 million." And that seems to come. I don't know if you've seen that a lot yourself as well.
So the whole I don't know whether it's out the scope of the conversation, but the marketing side has changed dramatically over the
Yeah.
last few years as well, with particularly TikTok. I think from a regulatory perspective, it's interesting because there are a lot of questionable advertisements going on by obviously non-regulated people just giving their
Their own advice.
advice.
Just random people, isn't it? Just not even affiliated anything. But it's funny you mentioned regulation, because I was gonna sort of bring that up. And that does regulation play a huge role when it comes to developing the industry and thinking about these new advancements as well?
Yeah, for sure. So if we're the very broad wealth tech, looking at it through that lens, is investing is a heavily regulated environment in the UK. Clearly, the FCA has pretty strict oversight on retail clients. I mean, we deal with the sort of overlap between retail and professional investors, and all institutions need to show, that they've done everything they need to do to opt people up from retail to professional investor, for example. So if you're a bank, you need to have very clear audit trails and workflows and evidence that you've done everything you need to do to be showing people certain investments. So it's the other end of the spectrum from TikTok, where you've got extreme oversight and lots of compliance to go to. And I think over time that's certainly something that technology solves, because you go back maybe 15, 20 years and everything's email based or basic CRM based. So you're having a conversation with a client, whether it's face to face or over the phone, then you're logging like notes on a basic CRM, and then it's the onus is on the person or the banker to have opted up the individual. Whereas now I think it's more of you can log into a platform, you can confirm that you are XYZ, and you can give evidence, you can do all the KYC, that sort of stuff. So I think it's taken a lot of the burden off verifying and checking. So it's probably a good thing in that aspect. But certainly changed massively over the last 10, 15 years.
Yeah, fantastic. And I know sort of robo advisors, you mentioned very briefly before as well. I know they're sort of a really popular solution when we're thinking about wealth tech. What about them makes them so successful? What is it that's really gearing up in advancements?
It's interesting. I'm not sure they are that successful. I mean, it depends, I guess, what metric you use. I think many firms have had a go at building a robo. So famously, I think UBS Smart Wealth was a robo advisor type effort maybe 5-6 years ago, and I can see why businesses look to do it, because they want the scale, they want the automation of trying to engage with the client base in a relatively friction-free way with few relatively expensive people involved, to create a good business model. But I'm not sure anybody's got it completely right with the combination of the right target market, the right technology, and the right business model. So I think in the high net worth, ultra high net worth wealth management space, the massive challenges are people still want to deal with people. So I don't think the robo advice works as a front end solution there. There's obviously places in the chain that it works to help automate its stuff in the middle office and back end. But then you've got say the more retail market that you've got, as we mentioned, some investing apps that are doing well, but they're very niche in who they're dealing with. So I don't think there's any one super successful robo advisor, but I could be wrong, because it's obviously not my core area of focus. So
Yeah, absolutely. I feel like they're all always kind of what you hear about first, but then I wonder if that's just because of the interest in sort of AI and other things that we have at the moment, like you're saying with Chat GPT and all the rest. There seems to be a really big just keenness on AI, and that's kind of future building, right?
But I do think it will have just focusing on the AI implementation in robo-advising, it'll have a massive impact in that us talking now on a screen rather than face to face in real life. This it's not a big step from where we are currently to having an AI doing this, but obviously giving advice. So if they can be programmed in a way that they will give advice to the level of a pretty experienced banker, let's say in the wealth management space, then that becomes a real viable way of delivering what is currently being done in that space. And I think people would have more faith in it, because for whatever reason, people just, they like to see something, even if it's not a human, something that looks like a human on the screen explaining something to them. And clearly, if they have faith that the information or experience or knowledge behind it is rock solid, then they probably would engage that way.
Yeah, and that does lead on to sort of one of my other questions, was how accurate can a wealth tech offering be? Like how can they compare to, like you say, the seasoned bank manager who's been doing it for 30, 40 years? Is there the same knowledge base there?
I think it depends on what specifically people are trying to do through the wealth tech. So if you're looking for simple investment, investment advice spans such a massive, broad category. You've got, standard publicly traded stuff all the way through to private markets that are far more complex and difficult and illiquid. And I think if people are looking for example, a relatively simple mortgage advice type thing, then wealth tech might be able to deliver that quite well at the moment, because you've got, when you've only got a set of questions to answer that are relatively narrow, I think that's where it does well. I think where it becomes exponentially more difficult is the more information or bigger picture stuff you have to take in to get to the right answer. That's where it becomes complex. And so if you look at, like, let's say the extreme space of ultra high net worth wealth management or family office wealth management, there are, so many different parameters and variables to take in that arguably that's far trickier to do than just like simple mortgage advice. So but again, it goes back to the AI point that as automated systems become more and more savvy in taking in broad amounts of data, it will be easier for them to do that, and then easier for them to deliver that information through these sort of virtual platforms.
Yeah, that's really interesting. And I guess with the current economic climate and things being a little bit sort of dicey everywhere, really, has the personal wealth management and I guess therefore wealth tech seen any slowing down in that sense, or is it not being affected at all?
I think there's probably a few ways to look at it. So I think the actual wealth management side becomes more important when economic climates are more volatile, because the advice is probably arguably more valuable. When we see huge fluctuations in public markets, probably the best advice is you invest for the long term, so you need to keep that lens rather than emotionally like jumping in and out and that sort of side. On the building businesses side, clearly, because there's been a pullback in, let's say, the level of capital being invested in businesses across the board, that may be a bit of a blip in setting up new firms or the innovation going on. But I think broadly the longer term trend is more and more capital is coming into the wealth tech space, which is, we keep saying wealth tech, but it's massively broad category. So across the whole broad category, more capital coming in. And because, we're seeing big layoffs at big tech companies, those people that are coming out of them tend to be pretty capable people that then go and start, their idea of a firm. And as I think I mentioned at the outset, I think it's never been a better time in human history to build stuff, because there are so many resources available, and you need just far fewer people to do it. So I think you could look at it through multiple sort of lenses. I think there's probably, I don't know whether this is correct or not, but there's a lot of big tech firms that are around now, like Microsoft and some others, that were built in recession or started in recessions or bad economic times. So
I guess it's always the one thing that I think about fintech, is that fintech kind of was born to solve problems, and what better problem to try and solve than a difficult economic situation for everyone, really. So it makes sense that things come out of that can make things go better, which is really exciting. And I guess my last question to you really is, what does the future hold? What are your hopes for the future, both in wealth tech, but also both for Fidelio as well? Kind of what do you have in the pipeline?
quite a broad question. So yeah, from Delio's side, we're in growth stage at the moment. So we've got some big cornerstone clients that we've had for a number of years, solving that private market distribution problem. So we look at the cycle from origination, distribution, transacting, reporting, and we're trying to solve across that spectrum. So what we're seeing more and more is that certainly big firms are waking up to the value of private markets propositions. So I think it's always been an asset class that you go back 20 years and it was sort of a marginal asset class. So everybody was invested in public markets and it was almost a tiny fraction of an overall asset allocation. Now the value of having a private markets proposition, if you're a big bank wealth manager, is now clear. It's tried and tested, and you have to have one. So it's then how you deliver on that, and that's what we solve for. And clearly, those last 8 years of evolution have put us in a good place to where we are now. The future part is the exciting part, where all the development going on around tech, and it just all feeds back to that AI piece for me, because I think that's where that pace of development across all parts of the industry are becoming exponential. And we, from a data point, we hope to grow, or we are growing, and that will be our focus. I don't think the challenging economic environment won't impact us that much. And I think all strong businesses that are built exactly as you were saying, on a fundamental, we're solving a problem. It's a pain point that many have, and we've got a solution to it. I think that's the heart of all good businesses that are going to grow through however the macroeconomic conditions look. But yeah, I think generally just excited about that entrepreneurial landscape where there are people with more free time, whether it's because of layoffs or whatever else, and there are people now with more tools to implement their ideas. So I think it's going to be a more competitive landscape, but it's going to be a better one for everybody in aggregate, for sure.
Amazing. Well, thank you so much for joining me today. It's been absolutely fantastic chatting to you. And just to our online audience, if you want to hear any more about what we've talked about today, head on over to the Power 50 website or join the conversation on Twitter with hashtag FP50 Wealthtech. But Alex, thank you so much. It's been an absolute pleasure to chat to you today. Thank you.
Thanks, Polly. Yeah, cheers.